Let's just delve into CMC Holdings earnings for the year because, of course, this is a company that was in the headlines for all the wrong reasons last year. But it seems that from an earnings perspective, they managed to move into a profit-making position. So walk us through those numbers we saw.
Well, I would like to say more or less they were in the news for all the wrong reasons, but actually they were in the news for all the right reasons. Some of the reasons being those cost-cutting measures. You'll notice how they've reduced their numbers, and then further to that, they've also worked in terms of turning around the image, because before there was that big issue about the previous management and the previous administration, which had a system that was actually fleecing the company as opposed to it being able to be profitable. And if you go by what you're talking about in terms of net returns for it, at the end of the day, we've seen the new management has tended to be much more profitable for the company.
So as you say, I mean, ultimately, the fact that issues around corporate governance were highlighted has actually been, of course, a positive for shareholders. So what are your views on the prospects for the stock right now? Of course, we have seen a bounce in the stock this year.
Well, the stock will end up, because now what the executive committee or the management has been trying to show is that, look, we are a very good company. We've been there for years. The only issue that we had was to clean our house, which we've done, and look, it is actually bearing fruit. And at the end of the day, as a savvy investor, what you need to do is, when you're looking at which stocks to invest in, you'll always put your money where you know that the return on investment is viable. The sector which they are in has been growing over time and time again, despite the nascent wrangles that were there, but it's actually going. New car sales have been going up. Land Rover is there. They had the franchise, now they have the Jaguar, they have Ford, like you mentioned. And if you look at in terms of now where they are positioned in the market, it's actually very viable for them, because the likes of Toyota, there's the likes of Mitsubishi, but they are actually right there in the middle in terms of high-end sales, agricultural equipment. You have the farm implements, and they also have another marquee, which is VW. So when you look at it all around, they're actually a very viable company that one should look forward to in investing.
And of course, buying into the theme there also of the consumer in the East African region. Let's talk about the agricultural sector, because coffee prices, as always, came out for last week's auction, and double A grade coffee, the benchmark coffee rate, rising to $342 dollars per kilogram. But overall, we've seen a bounce in the likes of EGADS today, up over 9% top gain on the market. It's a small cap, but what's your sense as to some of the stocks and the performance we're likely to see from agricultural counters?
Well, one of the things we need to be grateful for is that, interesting enough, it's actually been, we've had rains all year round. I mean, when rains were not supposed, the dry season has actually been a wet season. So in terms of agriculture, there's been a very big boon in agriculture, because they've been able to have situations where you do not have drought. But then also going by it in terms of auction prices, the auction prices have been on the higher end for coffee. Coffee has really been doing well. Tea has also been doing well. And also going by it, when you look at that in terms of all year round, the demand for agriculture has increased tenfold, because you have a population upside, you have demand not just internal, but you have demand external. And when you look at going by it, you look at in terms of in the East African community, the borderless community, in terms of expanding, you have much more demand than you used to have. Certain restrictions that were there 2-3 years ago in terms of exporting as well have actually eased up. And this has created a higher demand. Then improved modes of agriculture. There's more leaning towards mechanized agriculture and moving away from the old systems of agriculture that were more reliant on the weather patterns, were reliant on more manual labor as opposed to mechanized and skilled labor, which in the long run tends to reduce costs, because mechanized and skilled labor, despite it being regarded as an anthema, actually brings down in terms of cost cutting, because you have more for less.
Yeah. I mean, all good reasons to buy agricultural companies, but we know that they're volatile and tend to most of the time be quite small caps. So on any one day, you can see them up 10%. And one might say, okay, well, we could see EGADS down by the same margin tomorrow. So would you be buying any of the companies specifically as a long-term investor?
No, as a long-term investor, you have to look at how well you balance out your stocks. So, but in the interim, short-term investors look at upsurges, and that's where you find that upsurge. All of a sudden, there's a very big interest in the trend where you notice agriculture is popular now. There's a very good return on the tea-related products or coffee-related. So stocks or companies that are more keen in that area, there'll be interest in them. But those are normally short-term investors, those ones who are looking for the value, money for the value for their money in the short term, sort of like an outburst. But in the long run, you look at it in terms of your portfolio, maybe pick out one or two in terms of the stocks that you get in. EGADs would be advisable, but in the long run, you look at it, you'd still need a bigger portfolio and have a small part that in that portfolio where agricultural stocks play a part. Maybe 5 to 10% at the most.